the Fed is really focused on the US, but I think Europe is in a recession. China, some of the numbers coming out of China are shocking as well. That has an impact on the rest of Asia. So what they're facing is a recession, and their currencies are dropping. Their currencies are dropping relative to the dollar, which means their purchasing power is going down. But it also means that some of them are tightening more because their currencies are falling against the dollar. So it's a bit of a vicious cycle. And as Nancy says, I agree with you, Nancy, we are not alone. Many people are thinking about the US in isolation. We've already had 1/4 of negative GDP, which most people brushed aside, saying, "Oh, that's a fluke." And I think that was a real number, and we should not dismiss it.
For quite a while now, the crypto market and the stock market have been going through a heavy bloodbath. The top cryptocurrency, Bitcoin, has lost approximately half of its value since its all-time high that it achieved early in November last year. Similar happened with almost every other cryptocurrency. Now people are seeking to know if there is an end to this, and if it is there, when it could come in sight. In such a case, if investors reach experts to have any direction, they get varied predictions list, where some are sure about the collapse further, while on the other hand, some are optimistic to see rallies and even new highs. Amidst the critical condition the crypto market is going through, Cathie Wood thinks that it gives a signal of its end itself. In today's video, ARK Invest CEO and CIO Cathie Wood updates about inflation, deflation, interest rates, inventories, business confidence, and more. Cathie also talks about fiscal policy, monetary policy, market signals, economic indicators, and innovation. Make sure to stick around till the end of this video where Cathie Wood explains her take on Terra Luna crash and where the market is headed next. So, without wasting any time, let's dive right into the video.
As you know, everyone looks at the same data. We all get the same data. The government puts it out. But different economists place different emphasis on certain variables at certain points in the cycle. And so we were watching 2 points of view based on the same data. One was we are back in the 70s environment. Inflation is baked into the cake. It's going to be very difficult to dislodge it. And we're probably in an environment where commodity prices, real estate, tangible assets generally are going to do much better than the financial markets. And so we were dealing with that scenario. And as you know, we were looking at data and actually more than a year ago anticipated a very different world. What we didn't anticipate, of course, was the extent and the length of time that we were going to see supply chain disruptions. And we certainly did not expect Russia's invasion of Ukraine. So those have been variables we've had to work through in terms of our own thinking about the future. But we did come to the same conclusion. That we were probably going to see more deflationary forces at the end of all of this than inflationary forces. And I believe that we are in the early stages of seeing that. In past cycles, many people thought that the dollar going up was the same as monetary tightening. It's a disinflationary force. And it's up 15% since the bottom, which is a huge increase for the dollar in such a short period of time and really hurts emerging markets. That those who are listening will say, oh my gosh, this is terrible. And it is in one way. But one of the things we're focused on is what will get the Fed to stop tightening or at least change its rhetoric. And I think as these forces put pressure on the economy, and you get companies like Walmart and Target reporting terrible numbers from 2 points of view. And I know Nancy's going to go into some of this, but their sales up 3% year over year, while inflation itself is up, if you looked at CPI, 8%. Now, they're not passing all of that through, but I am sure that they are passing more than 3% through. So that means their unit sales, their real sales, are declining on a year-over-year basis, while inventories are ballooning. And we think that those two factors, and now the Fed must be aware of them because Walmart's such a big, and Target's such big companies, those two factors probably have gotten the Fed thinking, my goodness, are we overdoing it here?
Cathie Wood also shared her thoughts on last week's $40 billion collapse of the popular crypto token Luna and its associated Terra USD stablecoin. Terra was the first major attempt at an algorithmic stablecoin meant to retain a $1 value at all times. Wood replied that she participated in a podcast with the founder of Terra about 18 months ago, and after re-listening to the conversation, she realized it was a Ponzi scheme. Wood noted that the number of Luna tokens in circulation went from around 300 million to 6.5 trillion in just 6 weeks. Still, Wood remains extremely bullish on Bitcoin. She called the Apex token, designed to stop minting once 21 million units are in circulation, a good store of value. She said the cryptocurrency uniquely and positively impacts emerging markets and provides an insurance policy against the confiscation of wealth in several ways, with inflation the most pervasive.
Well, one of the things that would be interesting to know is, have we ever seen inventories, Target or Walmart, have their inventories ever increased this much? So Target's inventories, their unit sales were probably down. 3% was the dollar value, but in units, probably down. And their inventories were up 42%. So take away inflation, that's 30 to 35% on a year-over-year basis. I do not believe we've ever seen that before. And these are well-managed companies. And so what I think happened was human beings overruled their enterprise resource planning systems, their software, and they did double order and triple order. I know that Target said part of the disappointment in sales and earnings was they had to start marking down goods in order to start clearing shelves. And even with marking down in April, these are through April, their inventories were up 42%. Walmart's were up 33%. Home Depot's up 32%. So much for supply chain problems. I mean, those, at least in the case of those three companies, the supply chain issues are disappearing. And one last point on used cars in particular. I think a lot of people bought that extra car because they didn't want to take mass transit. And they saw prices go up, so they actually made some money on those early purchases. I wouldn't be surprised if they now that mass transit is open much more, they start selling into the used car market where used car sales are already down 20%. I wouldn't be surprised to see an implosion in those prices. This is why the Fed will relent. First, they'll relent in terms of their rhetoric. You'll hear them talk, well, maybe we don't have to go up as much. But my guess is they will stop their tightening moves at some point this year altogether. And the stock market discounts the future. The stock market is looking very carefully at these numbers to discern trends out there. And as soon as the stock market understands that inflation is going to unravel and that the Fed is actually going to relent because they are making a mistake here, and I really do believe they are now making a mistake, tightening into the teeth of what seems to be a very significant slowdown and inventory bulge in the economy. I think that the equity market is going to take off again. But what we will see first is a rotation. And, on certain days we're seeing it, but the last year has been all about cyclicals and value stocks. There will be a rotation back to growth stocks because if Nancy's right, if we're right, growth is going to become very scarce out there. And so that true growth companies with strong revenue growth in the 20% plus range, to the extent there are companies like that out there, they will be rewarded handsomely as the market shifts away from value back to growth. And it can happen very quickly because algorithms are also trained to behave this way. Last year, it was straight up and to the right for cyclicals and value, and the momentum carried them probably too far, given what's happening with inventories. And the same can happen in the other direction.
As Cathie Wood is the founder of ARK Invest, an investment firm that focuses on disruptive technologies and innovation, here are the two main reasons she is positive about an end to the crypto bear market. She thinks the correlation with stocks is an exception to the rule. She foresees an end to the hawkish moves from the Federal Reserve.
Innovation is going to solve a lot of our problems. And we have a lot more problems since COVID, given the supply chain issues, Russia's invasion of Ukraine, zero COVID tolerance now again in China. So we have a lot more problems to solve.
Cathie Wood also added that ARK offers all its research to the public, feeding her clients with transparency not found anywhere else. She said the investment firm would continue to publish its models because the traditional financial world undeserves innovation investors. Wood encourages the companies she invests in to spend aggressively now and capitalize on massive growth opportunities. She believes that ARK's focus on truly disruptive innovation is valued at roughly $7 to $8 trillion, less than 10% of the global equity markets. So what are your thoughts about Cathie's take on inflation and deflation? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.